we have, in my opinion, a very major classic fiat monetary crisis of sorts emerging because of a combination of the amount of debt that needs to be created for and monetized, and where we are in the cycle for all the reasons that we can go into. And I would worry for investors either who are anti-Bitcoin or pro-Bitcoin that they're not looking at what do they hold, and why isn't this just an anti-fiat monetary crisis, and shouldn't you hold a properly balanced, diversified portfolio of assets that are going to then protect you against that? Because if you concentrate in any one asset, whether that's gold or whether it's Bitcoin or whether it's other things, I think that there are a lot of risks that are intrinsic in that. Others can speak to it, but I could list a lot of Bitcoin risks, and everybody can. And so the real question I think that you should ask, Britt, or for your institution and that other investors, is how much do you have as a diversified portfolio against the devaluation of the bonds and the debt that you have and the valuation of the currency, and how well diversified is that anti-cash, anti-fiat currency portfolio among the things that are available in it?
Yeah. So we're in a situation now where the fiat system is fragile, but and I'm going to interpret that as, you talked about an alternative currency. This may be it or may not be it. But
the main thing I'm trying to say, Bit, is I think the conference should, conferences and individuals should not be so focused on the one thing, the one magical thing, because I don't think there's one magical thing and you put too much into it. And if you're putting the amount that is being described, I don't think you could look at past returns and consider them indicative, or even the volatility as indicative. Put that aside and just basically just say, how many bonds do you have? Why the hell are you holding bonds? Well, how much cash do you have? Why the hell are you holding cash? That's somebody's debt, and they're going to print a lot of that. And then, then what is that thing that can have a comparable diversifying impact on your portfolio that's a well-diversified portfolio of assets that will protect you against the things we're probably all concerned about?
So how do you think about an alternative currency, if you don't want to focus specifically on Bitcoin, but an alternative currency in a situation like that? Well, we know there's going to be this massive vying of for global preeminence between the dollar and the renminbi.
Is that for me?
Yep.
I think just to look at the mechanics of it and the supply demand of it. Look, there's this arc of a currency, and at the point we're producing a lot more debt because we have to give people checks. You've got to give people money, and the federal government, the central government, is not allowed to produce money, but it can direct it. And so for political reasons, for social reasons, all these reasons, they're giving out a lot more money. So that a lot more money, the central government, means a lot more debt. So you have to sell that debt. And you have to sell that to a world out there. A lot of the debt is held by foreigners. And because the dollar was the world's reserve currency, by the way, dollar currency equals debt. So if you hold a currency, that means you're holding a debt, whether it's a short-term debt or a long-term debt, but you're holding a promise to receive this paper money, essentially, that can be printed. And so what we have is a supply-demand imbalance. We have to sell a lot more debt to a lot of those who are holding a lot of debt, too much debt in terms of their percentage. And those include places like China, which holds $1 trillion of debt, and that you have to sell that, and they don't want to buy that as much as they do. So if you don't have the demand that's large enough to buy the quantity that'll be sold, and we won't, then the central bank mechanistically is in a position where they will either see interest rates rise and having the rationing of that debt, which is negative for the economy and negative for financial assets, or they will print money and buy that debt. I think they're going to print money and buy the debt. So now you have, if you think of the world, step back and think about international big sovereign wealth funds, central banks, and the like. You also have the emergence of an alternative place in the form of China in terms of investment. Don't think in terms of just the currency, but the investment. So they've opened up their capital markets. In 2015, you could invest in only 2% of those capital markets. Now you can invest in 60% of those capital markets. And they're offering higher yields, and there's a balance of payments. So I think you're going to see a supply-demand problem in the United States and a relative movement. So if you take, let's say, a bond in China, it's more attractive in a sense for its interest rate and so on. So, and then China is really on the lead in a digital currency, its own currency. And increasingly, I believe that will compete. So international investors and perhaps American investors will start to think, which one of those do I own? And then there'll be more choices. And that'll be a competitive environment. We haven't been in a competitive environment because the dollar has been the world's reserve currency. Now, I'm not saying that this shift is going to happen quickly, but in answer to your question, given the already overweighted nature of portfolios around the world and everybody, and then that's other supply, and you look at bonds, which is dollars equal, like if you're a pension fund, and how's the 60-40 working? You know, what are you going to get out of the 40? So you could get, rather than not enough demand to buy those bonds that are going to be sold, you could get selling of those bonds. And if you have the selling of those bonds, then the central bank will be put into a very difficult position of either having interest rates rise a lot or having to monetize as it's been happened before.
Yes.
This has all happened in history in the British pound. So that's the answer to your question, in my opinion, about the supply and demand. And it won't be just dollars and Bitcoin.